Hey, it's Mark Yegge, wealth architect, author, and founder of Light Circle. Wealth isn't just about money, it's about balanced abundance in your health, your wealth, your relationships, and your soul. Let's take your life to the next level and build your dreams into reality. Welcome to the Wealth Architect Podcast. Hey everybody, it's Mark Yegge. Welcome to another edition of the Wealth Architect Podcast. So glad you're here. Today we have an interesting discussion that's going to center around financial freedom and why you should keep pursuing it if you're not already. We have today the pleasure of a gentleman named Parker Pursell, and he's at the helm of EQRP as the president CEO. I'm just going to read his bio because it's really impressive. They're revolutionizing financial freedom for professionals and investors. Guided by the principles of steward leadership, Parker's fervor lies in nurturing growth, both in individuals and in their financial success. His career spans impactful roles at Chick-fil-A and Pursell Farms, but it was during the COVID-19 pandemic, during the unemployment wave, that Parker's trajectory took a transformative turn. Embracing the challenge head-on, he ventured into financial world, joining EQRP. Now, 3 years later, he leads the organization, leaving an indelible mark by empowering thousands of individuals annually. His dedication to cultivating financial liberation stands as a testament to his unwavering commitment, shaping a future where financial empowerment knows no bounds. Parker, welcome to the show.
Thank you for having me on. It's a pleasure.
That's a big introduction to live up to. So you better start living up to it. How are you today? Where are you? And what are we talking about today?
Yeah, so I'm from Birmingham, Alabama. That's where I currently live. And today I want to talk to your audience about really like our mission at the EQRP is to help empower individuals to take control of their financial lives. We do this through the self-directed retirement market. That's where we found our in with a lot of people, especially when you look at the problem today of people feeling very uncertain about their financial future with everything that's happening. Sure. And so for us, I would really love to talk about what, like you said before the show, true wealth really is, how you can attain that, right? Like there's ways to do it via your finances, but there's also so many other forms of capital that's out there that you can achieve true wealth by, not just through your finances. So I'm really excited to dive into this today.
Absolutely. And I am too. And I think it's important to kind of lay out the plan. But that to me starts with the first thing that you said, and that's self-directed IRAs. Now, a lot of our audience knows what a self-directed IRA is, but a lot of them don't. So maybe you can explain that really quickly.
Yeah. So in the traditional system, self-directed retirement accounts are typically just, hey, you have the ability to choose stocks for yourself, right? Versus, I would say over the past few years, it's caught a lot more wind, right? Self-directed IRAs, 401ks, you name it. People are now like, wait, I want to actually start putting these resources into alternative assets like real estate, like private lending, like Bitcoin, you name it. And not be subject to the traditional system. And I say subject being stuck, right? So the self-directed retirement accounts give you a lot of freedom to choose. There's still rules on how it works, but if you're interested in investing in assets that are outside of Wall Street that they don't offer you, like real estate, Bitcoin, that's why you would go with a self-directed retirement account in particular.
So you did say that there are some rules to it. I think we're just kind of going to dive in. Normally we talk about how you got into this and all this stuff, but I think this is such a fascinating subject. Maybe we can, go back to that in a second. But
yeah,
what are some of the rules, and what are some of the pitfalls that you can screw things up if you're doing a self-directed IRA?
Yeah. So I'll give you a couple things, right? And really the main things, if you're interested in it. What it looks like. Typically, when you're investing with a self-directed retirement account, you cannot directly benefit from those investments. I'll use an example. So if you're thinking, oh, I'd love to go buy a vacation rental with my retirement account and then go use it, when nobody else is, well, you can't do that. It's got to be at an arm's length distance. Or I want to buy a house, like a fix and flip, and then rent it out. I'm going to do part of the work because I'm a contractor and I can do it and I can save money. Well, you can't do that. You have to contract everything out via third party. So I'll give a visual for your people. If you're looking to make an investment, just make sure you like Heisman that investment and stay arm's length distance away, because the IRS is always going to say you're guilty until proven innocent, right? And secondly, what can't you invest in? I think when people say, well, what can I? There's a ton of options that you can, but we'll focus on what you can't. Collectibles, right? So I'm a golfer. It would be really awesome for me to get my hands on Tiger Woods. They call him the Tiger Slam, his irons that sold for like, I don't know what it was, a couple $1,000,000. Collectibles and art and wines, like those, the value's kind of put in the eye of the beholder. So the IRS doesn't let you invest in things like that because there's no way to get a real fair market valuation, right? So can't do that. And then also lastly is you can't invest with direct lineage. So think, I'm going to go buy my father's house with my retirement account. Then you can't do that because it would be direct benefit from a bloodline standpoint. So if you look at a family tree, anything that's vertical, you can't do, but anything that's horizontal, whether it be your brother, sister, cousin, aunt, uncle, you can go do, those type things. So those are 3 real easy tips. I think if you kept those in your back pocket while you're doing it, it would save you a lot of heartache along the way.
Okay. What about NFTs? Because NFTs can be tied to collectibles and they're a crypto. So is there a ruling on that, or is that wide open? It is an investment, but it's a collectible. So how about that?
It's like it's the Wild West with crypto. Like I'm a big proponent of Bitcoin. Like I love it. I love what the space is doing in terms of innovating, right? Like there's a lot of naysayers, but I'll say what I tell people traditionally is if it's gray, stay away. And I only say that because the IRS just isn't going to be graceful towards you unless you're being above reproach. And with NFTs, because there's no determination on what it is yet, it's just kind of like whatever we think it is. And there's no ruling from the IRS specifically on NFTs. I'm just like, I would just stay away from it because there's so much other things you can go do. I was like, just go buy more Bitcoin. Like, and then whenever they make a determination on NFTs and, go do it. But that would be what I would say. It's just hard right now because it's still the Wild West out there. Now, with all the ETFs and things coming on board, it's been awesome because it's given some real positive light towards the crypto industry in general. We're obviously seeing that with the new all-time highs that have come recently. But I would go to say that probably in the next couple of years, there'll be some determination on NFTs and what you can and can't do with it.
Yeah. So I asked the questions as if I didn't know what was going on for some of the audience that may not be aware of self-directed IRAs. But, when you're in a 401k program, for example, at your company, they may, and I used to run a company, and we offered people a set of mutual funds, right? Just a certain set of mutual funds, large cap, small cap, mid cap, international, gold, just a few funds, maybe 10 or 15 funds. And they were all within one fund family at that time. Now you can go to Vanguard, and that's a big family, but the bottom line is you are limited to your approach, and it's generally a Wall Street approach. Now you can diversify within that, and that's, I'm not a big believer in diversifying that way. But when you go outside of a 401k, for example, and move it into not just an IRA that's also similar to a 401k in that, Schwab or TD Ameritrade or whoever might offer that, that same kind of thing. Now you can go and you can put it actually into self-directed, which means you have to have a third-party administrator, right? Somebody that watches over the IRA, and then you can do it through a self-directed structure. So you can invest in nearly everything that is arm's length, right?
Yeah. So for us, like the EQRP was founded on a 401k structure. So it's a self-directed 401k that individuals, solopreneurs, and even business owners, right? So in that instance where you had employees in your company and you had your traditional 401k, we actually offer the ability for business owners with employees to truly self-direct. We work with a TPA that manages the fund side, but then we're also partnered with them to where they have the ability to take those funds and go invest in real estate as well. The 401k structure typically is more, I call it streamlined. It's like the Ferrari of the retirement accounts, because the rules with 401ks are a lot cleaner. There's not as much friction in the process. So self-directed IRAs, like you said, you've got the custodians, you've got to ask permission. There's just a process. But with the self-directed 401ks and with the EQRP in particular, you have checkbook control. Like you have a bank account where your retirement account sits, and then you can go put that money to work just like you would with your debit card, right? Like, so you could go, if you find a deal, if you and I had a deal we wanted to go do, like I could literally write you a check or send you that money near immediately to go do the thing. But if you go the self-directed IRA route, then there's just more of a nuanced process that goes with it. So for people probably like us, right, we want to move fast, we want to act quick, we want to be nimble. We don't want to wait 2-3 days. We want to be able to do it now. So that's what we are able to do with our people, is give them the ability to act quick and then give them the confidence. Like, if you're asking me all these questions, we're not advisors, we're more like coaches. So they say, hey, like I'm looking at this opportunity. What do you think, or can I do it? It's like, yeah, you absolutely can do it. Or, hey, here's another way to think about it and go do it this way for you to be compliant.
Hey, it's Mark Yegge here to tell you about our cash flow machine trading program that's designed to teach you how to make safe, reliable income. Now, we shoot for 2 to 4% a month of income and growth in your portfolio. And we have courses to teach you how to do this yourself or inside a mastermind community. And the best part of that is it only takes about 20 minutes a week to implement. Now, while 2 to 4% a month doesn't sound like much, I show you exactly how we took my IRA from $111,000 to over $500,000 in just 19 months without huge risk. I'm not telling you this to brag, just to show you that you can do this too. So to learn more about this program, go to cashflowmachine.io. That's cashflowmachine.io, and you can learn more. I love it. So how did you get into this business? I mean, I kind of said it in the intro, but you've been there, what, 3, 4, 5 years, but how did this company start, and how did you get involved with it? And how did you grow to be the top dude?
Yeah, so I ask myself that question every day, right? Because I worked at Chick-fil-A for a season and wanted to go be an operator. Then I went back to our family business. We actually have a resort destination here in Alabama. Used to be in the fertilizer industry for a long time. That's another story for another time of how we got into hospitality. But at the end of my stint in the family business, I was unemployed and pressure washed for about 8 months to try and figure out kind of what's next. And for the first time in my life, I was like, man, I feel like I've got the ability to go choose the thing that I want to do and what I'm interested in. And so I was in a Bible study with a friend of mine, and he said, hey, like, come talk to my boss that I work with, just see what goes from there. And so I'm a builder by nature. I don't like to be put in a box. I like to put my hands on things or systems and processes and build something. And so, the opportunity came here. I had no idea what it was to begin with. And my financial literacy at the time was, near garbage, probably whatever you see on, TikTok or X or whatever going on. And, but I wanted to learn, right? Like that was always a part of me, that there's this longing to understand how money worked. I watched my father and grandfather build this massive empire and sell it for 9 figures. And there's this part of me that's like, I feel like I understand some principles, but I don't understand what it takes to build something of that magnitude and get it to that point. So stepping in this industry, I just put my head down and started looking for problems to fix in the business. And, over time, I got the opportunity to run the company, and all my previous experience really helped set me up for this opportunity to do that. But the company's made such an impact on me, as much as we get to help people and empower them to take control of their financial lives. It also did it for myself. And so I feel much more confident about my future because of what this company's been able to do for me. And let's just say you took everything away from me today, the knowledge and information that I have around how money works, how it operates, right? There's just indelible principles of, how you can go get other people's money and do something. Like, I feel much more confident to be able to do that moving forward than I would have, you know, other than, I got to go look for a 9 to 5 and I got to go put my time, you know what I mean? Like I'm like, I'm trying to get out of that as quick as I can.
I think you and I are both big fans of financial education, and just in talking with you and reading about what you do, and I think it's really important for people to be financially educated. That's those are the people that are listening to this podcast. Is to learn a couple of things every week or twice a week to learn just some nuances about finance. So, what is the significance of education in some of the financial decision making? How does it help people change their lives? Maybe you could even weave that answer to that question with a story of somebody that you've helped.
Yeah. I just, I think the thing, like, as I see the people in our, uh, that I work with, like, those are the stories that I think mean the most because, like, if we aren't being changed by what we're doing here at the company as employees, then how are we going to change the lives of people on the outside? So I like using internal stories because it really helps, I think, hone the message in a little bit more. So there's an individual here that when he came in, had some debt, had kind of a lot of how I came into the company, just with little education, little knowledge, didn't know what investing was. This individual's our chief technology officer, brilliant individual. And every time I have something go wrong with any of my devices, I'm always like, hey, I need you to fix this for me. He's like, no problem, I got it. And fixes it like a 30 seconds, like a Rubik's Cube, right?
Right.
But watching people take action, I think that's the thing is where when you start putting more uh, information on in your repertoire, your brain about what you're doing with your financial education, you're able to make more positive steps forward. So this individual uh, took some information that we were able to give him, and then from there he was able to apply that to opportunities that came. And then he actually took the step, which I think is so important for him to be able to do. And now he's much more confident about where he's headed. His now wife, they're both on the same page, talking through budgeting and all those different things and being able to make these decisions together. And so, this next 5 to 10 years are going to be significantly different than what it used to be.
So you helped out this chief technology officer, and what were like some of the nuances that he was able to get from this kind of a realignment of his brain, maybe?
Yeah, so it's much like me, right? When you put this new information in your head, you're battling old paradigms, right? Like you're saying, okay, I've got these deep fundamental beliefs of what I used to think, and now I'm wrestling with this new information and I'm trying to make sense of it, right? Because what the future that I thought I had with this old information isn't serving me well. Now I want to input this new information in and say, how might this better me? And then take it and apply it and use those steps to then validate his new way of thinking. And so in that, to him, they're really big steps, right? To somebody else, they're like really small, but you have to start there, right?
Like what though? Like what are some of the steps? Let's get a
So
little.
for instance,
Yeah, give them.
yeah. So for instance, we had an opportunity come up to invest in a deal, and he was able to put significant resources for him towards it. Not like, hey, I'm going to put like, $1,000 here. It's like, no, I'm going to put more than that, right? Like something that makes you kind of squirm a little bit, but you have to do that to be able to wrestle with the emotions of it and
Sure.
then see it on the other side, right? Or with investing in, we'll just say Bitcoin, right? Like you could put $100 towards it, but if it's not going to make you squirm, then you need to put something that's going to make you pay attention. So for him, he's been taking these steps that have been making him pay more attention to the things that he values and cares about. And so in that, he's been able to build that confidence to take that next step when the next opportunity comes up.
That makes total sense because I think like you said, when you pay attention, and you don't learn. We have a mentorship program and courses on how to make money in the market, create income. But if you want to do paper trading, where it's not real trading, you get on a brokerage firm and you just click and act like you're buying and selling. You're going to make money all day long because you don't have any emotions tied to it. When you put your money in and it's a significant amount, now you are watching and learning and you make mistakes and you learn from the mistakes. You don't learn from the mistakes you make because on a paper trade because it just doesn't go against you. So that's great. You've got to, I like that. You put people in an area where they can invest where it makes them squirm a little, right? Just a little uncomfortable because you only grow at the edges of your comfort zone. So if you're going to just be comfortable in the middle and get your 5% in CDs or whatever CDs are paying, you're not going to exceed inflation and you're going to lose your buying power. But if you can squirm a little, right? Now you're talking about learning and actually maybe having an opportunity to get ahead. And what about risk? Like, what do you think? What do you think of the paradigms around risk that we've been taught? Maybe they're right, maybe they're not. What are your thoughts on those?
It's a great question. And I think my stance on risk is all risk is lack of experience in the thing that you're trying to do. So I'll use this example of a skydiver, right? Someone who's going skydiving for the first time is like, oh, that's super risky. Or somebody telling you like, oh, that's super risky. It's like, well, if I've gone skydiving 15 times, it's not risky to me, right? To somebody who's never done it, that's super risky. Or to the guy that's jumping out, who's done it 100 times, he just wakes up and it's like drinking his cup of coffee while flying 100 miles an hour through the air, right? So when you're assessing risk, I'm not sure your stance on Dave Ramsey, but it was a really great quote that he said, and I heard it on Alex Hormozy's podcast, where this guy came to him and was like, "Hey, I've got my portfolio here, and I just wanted to ask you, like, what your risk assessment was of my current portfolio. I've got 80% tied up in real estate and the other 20% in the stock market. Am I too overly levered?" And he said something really smart that I just was like, probably take with me for the rest of my life. He said, well, what's your knowledge of your investment in real estate? It's like, would you say it's 80% of your financial knowledge of what you understand? He said, yeah. And he said, well, then you're not overly levered or over risk because you're aligning your education and your investments together, which is smart. He said if it was flip-flopped and you had 80% in the stock market, but all your information and education lied in real estate, and I'd be like, you need to diversify into what you know. And so whenever you're making an investment and you're assessing risk, don't chase the shiny thing. If you're chasing the shiny thing in the numbers and you don't really know how it works, then you're setting yourself up for probably a lot more heartache versus taking a bet on your information and the education that you have for yourself. And then you'd be like, well, okay, I learned a little bit more if you lost, but you don't feel bad because you assessed everything on the front end and were like, this is a good decision. But sometimes it just doesn't go your way, right? So invest in what you know and understand, and don't go chasing the shiny object. A lot of people make a lot of money in a lot of different ways, but typically they're going to do it in what they know, and that's how they make their returns.
Yeah, I believe in the power of focus. And therefore I'm not a big diversification fan within an asset class. I believe in focus, like Warren Buffett has, billions of dollars, has been doing it 60 something years. And he's got most of his money tied up in Apple, like about almost half of his money is tied up in Apple. So there's a testament. He doesn't go out and buy mutual funds. He buys really focused investments and he just watches them and lets the people do their thing. So let's do this. I think this has been really interesting for a lot of people, especially people that want to take control of their finances. And I have a saying that I always that I'll close the show with. Everybody knows what it is if you're a regular listener or watcher, but let's give somebody that's getting started a tip on how to get started, and let's give somebody that's got some significant net worth a tip on what they could do from this point with you guys, or to take advantage of some of the knowledge and domain stuff that you have.
Yeah, so typically if you're looking to get started, like we don't treat people like robots. Like everybody's story is different. And there's a lot of context to it. So, first thing is just call us and talk to us through your scenario, your situation. A lot of people that are W-2ers that are kind of saying, hey, I want to get out of this like rat race style that I've been living for the past who knows how many years. If you've been laid off, if you have traditional IRAs laying around, old 401ks from other companies, you can take control over that. And we take all the brain damage out of it for you. So if you're like asking, well, how do I do it? Don't worry about it. Like our team literally handles all that for you and can get you control in as little as 2 days to start making those investments, right? So for someone looking to get started, just first ask yourself, what do I have laying around? What do I want control of? And we can help you get that. Secondly, if you're somebody who's of high net worth, and you've never heard of this concept before, and you're like, I'd love to take control over some of these assets or this income that's sitting to the side that I've just not been thinking about for a really long time, and then maybe put that to work in other assets. If you're a business owner with employees, right? We can help take away all the brain damage of that as well for you. So being nimble, I think, is very important. So, if you've got some significant resources tied up in your retirement accounts, but it's really concentrated in just the stock market, being nimble is probably the most important thing, because, we have clients that come and they buy gold and silver from us. And then, in 3 months, they can take it, liquidate it, and then put it towards a real estate opportunity if they want. So you have the ability to be flexible. And I think as a high net worth individual that's looking to preserve your resources, the ability to be nimble is very important, because the market changes all the time, right? Like, things happen. There's black swan events that happen. And if you got all your resources tied up in one thing, well, then that's a pretty dangerous place to be, because then you're just hoping that it bounces back and rebounds. But we can all speculate on what happens, right? But we can't predict. So if that's you in either of those scenarios, we're here to answer any and all of those questions. We're not a legacy-based company. We're always kind of asking what can we do next to serve the members of our community, and just reach out to us. Go to EQRP.com. Schedule a call with us there. Super simple, and we'll just talk through your scenario and see if it's a fit for you or not.
Cool. So EQRP.com if you're driving down the street listening to this podcast, everybody. All right. So what is one nugget you can leave us with, and then we'll say goodbye?
One nugget, man, put me on the spot. I would just say, if you're out there and you're feeling frustrated with how things are going for you currently, no matter what your resource level is, we have people that, make 8-9 figures a year, and they're still uncertain about their financial future, right? So it doesn't really matter where you are, but if you're wanting to change, you have to take that first step and charter control in a different way. And so, if that's you and struggling, like, we've all been there, we've all had to walk through that path, and the education piece, it's never going to fail you. Like, it's crazy thinking that I've been at this company for 4 years, and I feel like I've gained 20 years of my life in a 4-year span because of the education that I have and the way that I think about things differently now. So just continue to invest in yourself, take action, take control. If the opportunity is there for you, nobody's going to care about your money as much as you do. So if you have the ability to do it, take action, take control, invest in yourself, and then go make some really great decisions for the future that you want.
I agree wholeheartedly. Parker Pursell, thank you so much for being here and shedding light on what you do, the self-directed IRA process, and what you all can help people with. And that's basically learning more about financial education and investing in themselves. And speaking of investing in yourself, I always say, and you've heard me say this before, never give up your power in your health, your wealth, or your time. Thanks for being here, everybody. See you next time. Have a great day. Take care. You've been listening to the Wealth Architect Podcast with Mark Yegge. Follow us on iTunes, Spotify, or wherever you get your podcasts. Like and subscribe on YouTube. Share and tell your friends. See you soon.